Okay, folks, welcome back to Stock Chats. Remember, this is not investment advice. If you need investment advice, speak to your reputable licensed financial advisor. Now, we have been looking at earnings season, and this is just a short one looking at how you have to be extremely careful when you are doing your analysis of a financial report. Sometimes you may look at the bottom line and not see everything that is going on. And we are going to be using Victoria Mutual Investment Limited as an example, and we're going to be looking at that far right column that says year to date September 30th 2020, year to date September 30th 2019, and those would be the 9 months column. Now, Victoria Mutual Investment Limited is a subsidiary of VMBS, Victoria Mutual Building Society, and the VMIL is Victoria Mutual Investment Limited. They do stock brokering and investment, money market dealing with both equities and debt securities. Now, if we look at the bottom line for the 2 years, the 2020 and the 2019 corresponding, we will notice that 2020 has a lower profit at 361 million compared to 497 million. But if you look closely at the numbers, when we look at interest income, meaning the money that they are making off interest from their debt, the debt that they have provided to others in investments, we are seeing that has increased from 615 million to 733 million. Of course, interest expenses also increased at 481 to 402 million. But of course, right there, the net interest income has increased for the 9 months at 252 million compared to 213. When we look at net fees and commission, which is those fees and commissions that they get for providing investment transactions and investment advice, that has also increased from 673 million to 734 million. Also, the other income, that could be foreign exchange and others, that has increased to 154 million compared to 56 million. So we see that the operating revenue is 1 million compared to 1.1 million. But what are we seeing? We are seeing a significant drop in gains from investment activities, and this shows it at 192 million compared to 421 million. But if we look closely, this is very important, because at this time, because of COVID, investment activities and equities that would have been bought by VMIL would have seen reduction in their stock prices. So this would have been an expected reduction. So if you look at all the other parts of their revenue, everything has increased except for gains from investment activities. And that shows you that despite the profit for the period being reduced to 361 million compared to 497 million, there is definitely some space for improvement when COVID is improved. So for those long-term investors, they would say, well, VMIL hasn't done badly, because if you consider putting in back that gains from investment activities to where it is at 421 million or higher, the revenue that they made for the 9 months of 2020 would have been pretty good. When you look at the expenses, when it came to staff costs, that has increased significantly from 362 million to 447 million. and also operating costs have increased from 326 million to 400 million. So of course expenses have increased, and again because of COVID-19 we are seeing another increase in the provision for credit losses on financial assets, going from 20 million to 54 million, and that is a result of COVID-19 because, as I mentioned in an earlier video, the accounting format that is used by the Jamaica Stock Exchange ensures that financial institutions have a provision for expected credit losses due to their financial assets, and as a result 54 million dollars is for this 9 months. Of course that is a non-cash reduction, and so if these losses do not occur, being tangible, then that could also be put back into the cash. So as I can see right here, we're just showing you how you have to look at more areas in the profit and loss than